Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to take a look at the S&P 500 and look at those surging precious metals. I was on traveling last weekend, so there was no video release. So let's dive in and take a look at what's happening here in the industrials, the S&P, and the NASDAQ 100. Here in the last week, the Dow was up 412 points for the sixth week in a row, continues to surge. What's interesting is, for quite a while, we were looking at this thinking, well, we're getting some pretty substantial divergence in here. It's like a little flag, warning flag waving. Well, guess what? The divergence went away. That's always the risk. There is no divergence showing up right now on the weekly level. This has continued to push to the upside, riding above the 10-week moving average. Similar kind of thing over here with the S&P 500. It was up 50 points this last week. It's been up 6 weeks in a row. Although, again, this third middle week here really was pretty marginal, as it was with the Dow Industrials. Very marginal. When you go to the equal weight S&P 500, this was actually a down week. So, or I think it may have been this week right here on the equal weight. Anyway. Similar kind of thing. It looks like the divergence is starting to go away, not nearly as dramatic as what's happening on the industrials. And when you look at the NASDAQ 100, it has yet to take out the July highs. It was up only 52 points this last week, so not very strong in terms of the move that it's had. For several weeks, I was waiting for this to be a counter trend move and roll over and die, but it did not, and it continues to push to the upside, and I would say the odds favor that it's going to take out the July high, similar to what's happening over here with the other two. Okay, let's take a look at the S&P 500. So here's the 50-point move on the weekly we just talked about. Here's what happened on Friday, up 23.2, just a little inside up kind of candle in here. Pretty compressed trading, but continuing to trend higher. I've got to lean into this bullish candle. Let me just show it to you on the weekly right here. This actually clutters it up. I'll show you that on the daily. Let me go less than a week. So yeah, I'm looking for a fifth minor wave to finish off this 5-wave sequence within the third intermediate wave. And yeah, I think we're in a big impulse wave structure that there's a pretty good chance, the way this is moving, that it's going to keep rolling. Nothing goes up every month, every week, every month, but I think this is going to keep rolling well into 2026. We'll see. But meanwhile, how far are we going to get in the third wave before we get a choppy sideways-ish kind of correction here for intermediate wave 4? Let's go down to the daily and take a look. So I think that we're still trying to finish off the third minute wave within the fifth minor wave. I just don't think this little third wave here is done yet. And this is what I'm looking for. And again, remember, when you're in a third wave like this, it needs to be an impulse wave structure. Unless, of course, you're in some kind of ending diagonal pattern, which at this point, it doesn't look that way. It doesn't look like an ending diagonal pattern. It doesn't look like a series of zigzags. So I am leaning into the impulse wave structure, and that's the way we've got this laid out right now. So we'll see how well the price action wants to play along. Okay, that's the picture that we've got there. Let's take a look at a couple of indicators. Some of these aren't showing you a whole lot, but I tell you what, I want to go back like this. And I want to go here just with what I call the moving average view. And let's take a look at the VIX. So the VIX is all of a sudden heading back down into the cellar again. So we've been down 3 days in a row. We're back at 1803. We were down 108 on Friday. So just when you think, wow, we're going to get this thing fired up, getting above the 20 level for the third time in the last 3 months, it dies off again. Okay, and it was down 243 on the week. So that's the picture right now. All of a sudden, everything's just kind of calming down. No No huge volatility increase going on in there. We take a look at the percent of stocks in the S&P 500 above their 50-day moving average. Okay, this has been on a 30-day sequence, and I showed this to my members earlier this week. And we've got where the low has been on a 30-day cycle in here, and after it hits that, it then gets and closes above the 10-day moving average and pushes for 8 to 12 days or so. There's no guarantee, no set amount, but right now we've pushed back or closed back above the 10-day moving average, and it's been up there for 2, 4, 6 days. So it looks to me like we're wanting to continue to push. The real question is how extreme, how overbought are we going to get in this particular indicator? Okay, let's take a look at precious metals. And I'm going to start off and take a look at gold, because I always seem to start with gold and then we move to silver. But let's start off with gold. This was up $2.64 on Friday. Let me go to the weekly view. Wow, this thing is just on fire right now. Up $5.80. Now, I'll tell you, I think that we're, and I'll admit, I thought we were at the end of the 5-wave structure here, and then we got this surge that's happening. I think we're very, very close, but what am I saying we're close to? I'm thinking we're close to the third intermediate wave, which means we then have more corrective to come, and then one more leg up after that. And you never really know which, is this the only wave that's going to extend, or is the 5th wave going to extend also? You just never know. But right now, we're pretty extended. We're pretty overbought on a weekly basis. You can see my RSI, which I use a 10 bar, is sitting at 85.7. Okay, the 10 bar reading over here was 84.9. And after we got to that point, we basically chopped around for weeks, 2, 4, 6, 8, 10 weeks, 8 to 10 weeks. Okay, now we'll see what happens now, but I think we're near the tail end of it. And I'll tell you, when you start to see things like this, and I've seen lots of articles like this came out, okay? Lots of articles like this. And when this kind of thing starts hitting the press big time, and the consumer is going nuts into the purchase of gold, it's like, wow, that brings back some memories. I've got some memories about silver that I'm not going to get into right now, but pretty interesting stuff. I think we're maybe at the end, nearing, if not at the end, we're very close to the end of the current surge. Anyway, let's put it that way. But talk about surge. Let's look at silver. Because if everybody's getting excited about gold, gold is up, GLD is up 31.4% year to date. SLV is up 40.7% year to date. So let's take a look at SLV. Look at the move that happened on Friday, up $1.75, up $1.84 for the week. This is really on fire. And this is one that I think has got a lot more to go. Just even in this leg, I think it's got a lot more to go. I think we are in the third wave of the third intermediate wave up, of the third primary wave up. I think this has got a ways to go. But if you just short-term wise, I look at this and say, well, where does the current leg equal the first leg up? If you do just, that kind of a measured move type of thing. Well, it's equal to the first leg up at 35.65. And a normal length is up here at 45. So that's why I've got the third wave right in the middle of that zone. We'll see how how the wave structure unfolds in here. But I think we're looking at this kind of target area up in here for the third wave, and then we'll see where we go from there. But right now, this is acting very well. And then speaking of which, I want to go back. I'm going to switch and show you one thing, and then we're going to end in there and take a look back to gold. And now we'll look at this monthly view. I think I may have shown this before. Okay, this is a monthly chart. okay, of SLV overlaid on GLD. Okay, so SLV in blue, the price labels on the left, and GLD here with the price labels on the right. Now, you can see back in 08, 09, into 2011 when everything peaked, SLV was lagging gold, and then it surged ahead of it and surged much higher than GLD. So it's been lagging down in here for the last several years, but now looks like it's trying to play catch up. If all of a sudden this duplicates what happened back over here, we could get one heck of a move in silver. If we close this gap on gold alone, we're going to get a move back up to the highs of 2011, which were back over here looking at the left-hand side, 48.40 approximately. Okay, so this could get really, really interesting. Okay, that is it for today. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. If you'd like more of this information, head on over to joehenches.net. Check out the website. Check out the membership. Everyone have a great week. We'll talk to you on the next video.